Welcome everyone. We're gonna start the webinar in a couple of minutes, 3 more minutes. Just bear with me. We're gonna wait till almost all the participants will be joining the webinar. The webinar will start in about 2 minutes. Please bear with me. Thank you for your patience. A very good morning and welcome to today's webinar, One Stop Shop, the new EU VAT rules for online marketplace sellers based in the European Union. My name is Leet Rizul and I serve as Marketing and Communications Manager at Global VAT Compliance, known as GVC. I'm your moderator for today's webinar, which is bringing together nearly 100 participants from across Europe and elsewhere. We are delighted to have all of you with us today. Before jumping fully to the agenda of the next hour, I'd like to direct your attention to some of the housekeeping details. Presenters will be able to answer a small number of questions coming from the participants. So if you have a question, please use the Q&A function. You should see the Q&A button at the bottom of your Zoom screen, and the example of the icon can be seen on this presentation right now on the left side. To share other kinds of insights or reactions or to engage with your fellow participants, please use the chat box. The icon of the chat box can be also visible on the bottom of your screen and is also visible on this presentation on the right side. The presenters cannot see your faces today, but they need to know that you are here and that they very much welcome your questions and comments to the topics under the discussion. Please also note that unanswered questions are not unappreciated questions by any means. We are taking a careful note as you bring of your interest as you put your questions forward. And you're working very hard here at GVC to find different avenues to help answering the burning questions on your mind. If not today, then sometime in the near future. Please also note that as important as this topic is, At this webinar, we are specifically focusing on the impact that one-stop shop, so-called OSS, has on sellers who sell on online marketplaces and who are based in European Union. If you're interested in different webinars, we have 2 more webinars that are happening in a few hours. Please go to invitation and register for them. We're looking forward to seeing you. Joining us today is Paul Becker, a managing director from GVC. Paul has over 20 years of experience in indirect taxation and procedural law advisory. Paul leads GVC's consultancy and digital taxation practices, performing both legal analysis and tax analysis of international transactions. Paul is recognized by International Tax Review World Tax as one of the Netherlands' leading indirect tax advisors. Michał Telka is joining us from GVC as well. Michał is a business development manager with over 7 years of working experience in legal and taxation consultancy. Michał started his career at various legal firms and one of the big fours, which he later left to become a tax and legal consultant for commercial estates and now at GVC. With this introduction, I'd like to turn things over to our first presenter, Paul Becker.
Thank you, Duan. We move to the agenda. This is the agenda that we have in place for you today. We will first look into the EU VAT system and the context of the changes that are going to happen, and then move on to the one-stop shop scheme for online marketplace sellers. We'll talk about marketplaces as deemed suppliers, import scheme, special arrangement for customs, and also the union scheme. We will talk about the specific impact on Amazon sellers, as a large proportion of the online marketplace sellers in the EU seller marketplaces like Amazon, but we take Amazon here as an example. And then we will wrap up with some recommendations and some solutions that we have come up with, and then leave the floor open to you for questions. So you can ask your questions throughout the seminar. When they come up, but we will deal with them at the end. So that is the menu that we have installed for you today. I hope you enjoyed the content. So the changes, where are they coming from? Already a few years ago, the European Commission commenced with its action plan on VAT. The whole purpose was to modernize the VAT system and come to a robust single European VAT market. The single European market, of course, VAT is one of the important disruptors for doing business across Europe, because VAT brings with it inevitably a lot of red tape, just because of the fact that it's levied by each individual member state as such. So it is part of this greater plan to create a more comprehensive VAT system. And that has some building blocks or puzzle pieces, as you can see here. And one of them is, for example, action on VAT rates, which is in place, and which will bring some more liberty to the member states to adapt, for example, reduced rates, and get some more sensibility and also transparency on the rates that can apply. Its aim is also to tackle VAT fraud, which is, of course, a big issue with VAT in Europe. And lastly, and that is where these rules come from, an action to support e-commerce and small and medium enterprises. So that is, and that is basically what we'll focus on today. The reason why this whole initiative started, and the numbers you see here, they date back from the time of the action plan, was the amount of VAT fraud in Europe. So 50 billion, it has improved a little bit, but it's still quite significant. If you compare it to the total VAT uptake in the EU, almost 1 trillion, then it's a large number, but still within reasons. Another aspect that made the European Commission want to update the rules is the fact that we have a very old VAT system. It is 23 years old when they started, so it's already now a good 25-year old. And yeah, if you think back 25 years ago, then, well, there was hardly e-commerce happening. There was, when distance sales were happening, it was a company sending a brochure with products to another country. And then if the people in the other country liked the stuff they offered, they would send in a coupon and by post, and then also by post you got your products, you got it back. So that was e-commerce at the time. Well, I don't have to tell you, the times have changed significantly in this respect, and the rules need to be adapted. Another aspect is the VAT gap. And the VAT gap is the theoretical VAT revenue coming from the total sales that happen in a country, and what is actually collected. Well, when they started, it was 168 billion. In the meantime, I think the latest number is 140 billion. So there is already a big improvement. But also the rules that we will introduce today will reduce the gap probably to some extent. And there's also variation among the member states. For example, Sweden misses only 1% of its predicted VAT revenue, while on the other side of the hemisphere is Romania, where currently almost 33% of the theoretical VAT is lost. So there's room for growth there. And lastly, cross-border VAT fraud should be reduced by the total amount of measures, not only by this, but also by the other measures. So that's basically the starting point, and that's why we are talking about change now. Now, why do we see changes? Well, under the current EU VAT rule for B2C sales, there is an obligation once you exceed a distance selling threshold that varies per country, that are aligned on an EU level, you have to get a VAT registration in the country where the consumers are. Until the point that you reach the threshold, you can register, you can pay VAT in your own country. But some of our clients are actually dealing with 27 VAT registrations. And then if you also have registrations in the surrounding countries like Switzerland, Norway, and the UK, you deal with 30 different VAT registrations. So that's quite a lot. So they will bring some sensibility to the system. Secondly, there is a growing interest from EU consumers to buy goods online from non-EU sellers. And currently, the goods that have a value of 22 euros or less are purchased always tax-free. So you don't have to pay taxes, and you get it from the mailman, and there's no VAT paid. Whereas at the same time, and that's the last reason, an EU seller who sells the goods to you for 10 euro, 20 euro, he always has to pay VAT. So there is a big difference in how the goods are treated when it's still much easier these days to get to the goods. So that's why we need some change in e-commerce. Now, who will benefit from this? Well, in the first place, businesses who will have to deal with a lower number of VAT registration. So it's easier to trade cross-border because you don't have to set up a VAT registration. And this really can be burdensome in some countries where you have to get a great deal of documents to get apostilled before in the other country they will trust you to be registered. Also, EU businesses will benefit from trading on equal footing. So they will not have this disadvantage anymore that non-EU sellers below 22 euros are able to sell without fee, and they cannot do it. And also the revenue of the EU member states will increase. And this was expected at the beginning at around 7 billion. Now, don't underestimate the increase is maybe at 7 billion compared to the 1 trillion VAT uptake in all of the EU. It may not be much, but these new rules will also assure that the VAT collected from e-commerce will be distributed more fairly. Like currently, one of the largest marketplace countries is Germany. On most cross-border sales, their sellers, because they have not exceeded distance selling threshold, will collect German VAT. After the introduction of the new rules, more VAT will flow to the country where the consumers are residing. So it's not only an increase in revenue, but also a more fair distribution. At least that is the aim. So what will we see as changes? Well, first of all, the introduction of the one-stop shop, the title of this seminar. We will later on talk about what it means, but it means that for B2C suppliers of goods and services, you can apply a one-stop shop VAT return. So you register with the tax authority in one country, and if you're based in the EU, that's the VAT administration generally of your own country. And there you will file one return in which you can report VAT for all of the other EU countries. The other difference is that right now we have a VAT selling threshold, distance selling threshold per country. Also, this will change. There will be only one threshold of 10,000 euros. and it will apply to all EU countries together. So it's not a threshold per country, but once you sell cross-border goods for over 10,000 euros, you have to report the VAT of the country of the consumer. So that has a big impact. And then also the exemption of 22 euros for small consignments imported from outside the EU, that will be removed. So all goods coming into the EU going forward will be taxed with VAT. There is no way to get away from it. So to summarize the main changes, we will see the mini one-stop shop that we have currently and which applies to sales of services, mainly digital services. It will be expanded, so it's no longer mini, but it will be a one-stop shop which covers intra-community distance sales of goods, other B2C services, imported distance sales of goods from third countries. Next to that, there is a special arrangement for postal and courier companies for goods, so where the seller from outside sells goods from outside the EU of a value less than 150 euros. If they're not covered by the import one-stop shop, then there is a special arrangement for the shipping companies who can report the VAT then and collect it from the consumers. And lastly, also a very important change, in quite a few situations, it will be the online marketplace that will act as the deemed seller. So they will take over the B2C sale from the actual seller. But that only applies in a limited amount of situations, and especially limited when it comes to EU sellers. But more about that later in the webinar. So today, marketplace sellers need to think of a lot of things. So for B2C sales, they have to take into account that they register for VAT in every country where they are making sales from. Also in countries where they have broken the distance selling threshold, they need to be VAT registered, and also in countries where they choose to pay VAT. So if you are registered in another country, for example, because you fulfill goods from an Amazon location over there, you can also choose to pay VAT in that country because you have the VAT registration anyway. All things you have to think about as a marketplace at the moment, but you deal with many VAT registrations. Now here come the simplifications, and we'll see if there really are simplifications, but the over-encompassing term is the OSS, the one-stop shop. Is there really one-stop shop? No, this is Europe, so why don't have three one-stop shops if you could have one? So the first one-stop shop scheme that will come into place on 1 July is the non-union scheme. And this is basically a continuation of the current mini one-stop shop for non-EU sellers of services. So non-EU sellers of services can register in the non-union scheme to report VAT on services that are taxable in the country of the consumer. Secondly, the union scheme, and that is the heart and soul of this reform. In the union scheme, that is where goods and services can be reported by EU sellers. So EU sellers can currently already report services taxable in the country of the consumer via the mini one-stop shop. In the one-stop shop, it is these services, but also distance sales of goods. So B2C sales of goods that go to another country, so cross-border, intra-community distance sales, can be reported here. And then the third one-stop shop scheme is the import scheme, or the import one-stop shop, or IOS. And IOS will be the new scheme for goods that are fulfilled from a location outside the EU to consumers inside of the EU, and where you can get a registration where you report VAT for all of the EU. And it comes with an import one-stop shop number that grants you an exemption for the import VAT. Now, all of these schemes are optional. So if you like to be VAT registered in another country, like in the old days, then you can still do that. If you choose not to, then it means that then you can use these import schemes, union scheme and non-union scheme. If you do not use the import scheme, then it does not mean that the imports of B2C sold goods are not taxed. But then the collection will happen via the postal or courier operator. So this is a special arrangement that has been applied. And so if there's no IOS number at the border, then the postal and courier operators can collect the VAT from the buyer and the buyer can then pay the VAT to the postal or courier operator, who can then in a monthly filing report the VAT on this sale. Now, as an add-on to all these one-stop shopping, there is the marketplace as deemed seller role. So it's also called the deeming provision, where the marketplace is deemed to be the seller. That applies mainly to non-EU sellers, but can also apply to EU sellers who sell goods that are fulfilled from outside the EU, but I will get into the details later on. First, the marketplace as deemed supplier. This may look a bit puzzling, but I'll try to guide you through it. When a marketplace facilitates the distance sale of goods, then there is a chance that the marketplace, or OMP, will serve as the deemed supplier towards the consumer. So if you look at where the goods are the goods dispatched from a third territory to the EU, which could, for example, be the UK, which is no longer in the EU. So if it's dispatched from a third territory to the EU, if the answer to that is no, we go to the top. So that means that the goods are inside the EU at the moment that they're sold. For example, they're at an Amazon warehouse in France. Now, is the supplier established outside of the EU? If that is not the case, and the target audience for this webinar is EU sellers, so we assume that you are not established outside the EU, then the OMP is not the deemed supplier. If the answer is yes, so for example, selling in France for a US-based seller, then the OMP is the deemed supplier towards the consumer, and I will describe in the next slide how that works. Second situation, goods are dispatched from a third territory. If the answer is yes, then we're selling the goods from outside the EU to a consumer in the EU. If the goods dispatched are in consignments of less than 150 euros, which is the threshold for customs duties becoming due, if the answer to that is yes, so it's a small consignment, the answer is yes, then the OMP is the deemed supplier. And you will have noticed that I have said nothing about where the supplier is based. So also when you're an EU seller and you sell from a warehouse outside the EU to a consumer in the EU, then and you sell it via an online marketplace, then the OMP is taking over the obligation. It does not apply when the goods dispatched are above 150, then it's not a deemed supplier. And then in most cases, it will be the consumer who will be liable for the import duties and the VAT. But countries may enforce rules on the sellers saying that you have to collect, especially France has some specific rules in this aspect, so that should not be forgotten. Now, how does this deeming provision work out? If we have currently a sale from the seller to the EU customer, it's a B2C sale, then we currently treat it as a B2C sale. So the seller will take care of the VAT to be remitted and charged to the consumer. Well, after 1 July, in such a situation where the deeming provision applies, it will be split up. So for sales within the EU, it will not apply to EU sellers, but let's assume here the goods are coming from Canada. So you have a warehouse in Canada, you sell to an EU consumer, you sell it via an online marketplace. Then what happens is that you are deemed from a VAT perspective to make a B2B supply to the marketplace, or electronic interface, as it's called in the EU legislation. And then the electronic interface will make a sale, a deemed B2C sale to the consumer. And they will use then their own iOS filing to report the VAT. So it basically means that you do not have to charge VAT for the country of the consumer. That is a deeming provision, but the impact on EU sellers is rather modest because it only applies to imported goods. For sales within the EU, you remain the party liable. I will briefly touch upon the import scheme, so the import IOSS. Well, currently, you have basically 3 situations. Sales below 22 euros, sales between 22 euros and 150, the threshold for customs duties, and sales above 150. So as we discussed, below 22 euros, it will all be tax-free. Between 22 euros and 150 euros, if it's declared according to the correct value, there is no customs duties, but import VAT is incurred by the consumer, no obligations for the non-EU sellers. And then in the last instance, it's also customs duties, but currently all obligations, if they are there, they are for the consumer. Well, the new rules will strike out the first two situations, and only above 150, in most cases, nothing changes. But the top two will have to be VAT paid for. Now, we're talking here about a webinar where we have an online marketplace being involved. So assume an EU seller sells goods from a US warehouse, and there is an online marketplace involved that is enrolled for the import one-stop shop. What happens? We will have a sale below 150 euros from the EU seller, albeit with goods from the US, going to the EU consumer. Of course, this can also be a US seller. Then we have first a deemed B2B supply to the online marketplace, and then a B2C supply deemed from the online marketplace to the consumer, and the online marketplace will report the VAT with the tax office where they have the online, where they have the import IOS registration, and that tax authority will pay the VAT onward to the tax office where the consumer is based. So the VAT is collected at checkout, at the point of sale. It's collected from the customer. It's important that if you sell two items of 100 euros, then the combined value, if you put them in one box, is 200 euros, then the rules don't apply anymore. So it only applies where the consignment, so really the total of the package is less than 150 euros. You have to include a customs invoice, and you have to provide an IOSS number to customs. And be careful once you enroll for this with the IOS number, because the IOS number grants access to an exemption for the imports, but it also makes you liable for the imports that are conducted on this IOS number. So it should be protected carefully. And then the monthly IOS return is submitted monthly, but in this case, it will happen via the online marketplace. So that is what it looks like, the import scheme. Then next to it is there's the special arrangement. So if the seller is not enrolled for the IOSS, then there is a special arrangement. Imagine US supplier selling goods to a customer in Finland, not enrolled for IOS. So at customs, there's no IOS number. Well, also here, value up to 150, then the online marketplace can, or the postal or courier operator can declare the VAT in their monthly declaration once they have collected the VAT from the consumer. So if they don't collect it, then the consumer obviously does not get their package, but also the courier does not have to pay up for it. And with that, we come to the union scheme, so the intra-EU distance sales. And I want to share with you how it looks today and how it will look in the future. So today, if we have a distance sale, then the main rule is that the VAT is due in the country of the seller. So a Dutch seller selling to Finland for the first time, the second time, the third time, then he, let's assume he sells less than 35,000 euros to Finland, then he only deals with the tax office in the Netherlands and pays all VAT to them, and that's where it stays. So that is the starting point for distance sales. That changes once you exceed the distance selling threshold. And when does that happen? It has to be a sale to a consumer in the other country. As a seller, you have to arrange for the transport. No margin scheme are in scope of this. So for example, if you sell refurbished phones, then the scheme does not apply. Also, new means of transport are excluded. But in order to qualify for VAT charging in the country of destination, you have to exceed the national threshold. So there's a threshold for each country. Generally, it's 35K, sometimes a little higher. But in this case, below the 35K, which we settle with the Dutch tax authority. Now, once we exceed the thresholds and we go over the 35K, the things change. The Dutch tax authority disappear, and we say hello to the Finnish tax authority. So from this moment on, we exceed the threshold, we get registered in Finland, and the Dutch seller has to pay and remit VAT to the tax authorities in Finland. That is how it now, and if you're lucky, you're doing a great job doing business in the EU, and you end up with 27 VAT registrations. And yeah, you can be very happy about that because you're doing good. But this changes on 1 July. So what does it look like? The threshold per country will be abolished. There is only one threshold of 10K for all your EU sales. So in this example, the Dutch seller is selling for 5,000 to Germany, 6,000 to Belgium. That's 11,000 together. That's more than 10K. That means that on all cross-border sales, VAT has to be paid in the country of the consumer. So how does this work in the previous example? Dutch seller selling to Finland. In this case, he gets registered with the tax authorities in the Netherlands, but in addition to his Dutch VAT registration, he applies for the union scheme OSS. And based on that, the Dutch tax authorities will collect the VAT, and the Finnish collector says, thank you very much. And the VAT is settled between the tax authorities. So the Dutch company does no longer have to report VAT in a Finnish tax return, but he can settle it in the Netherlands. And then based on the return, the Netherlands tax authority will pay the money onward. That is, in a nutshell, how the new system will work. And that is basically the system that we have seen already for digital services. Now, what does this all mean for Amazon sellers? So currently, if you are registered in Amazon FBA, then you need to be VAT registered in every fulfillment country. If you don't yet do that, then Amazon will ask you to. Also, you need to report transfer between the Amazon countries. So if you move your goods from Germany to the French warehouse or to Spain, then that is all things that you have to report. So you cannot do that without being VAT registered. Local sales in the country of warehousing, you need to report there. And once you exceed the distance selling threshold, for example, from Germany, you sell for more than 35,000 to Austria, you need an additional VAT registration in Austria. And also if you file the option to tax, and because you're registered in the other country, and you say, okay, now I pay VAT in the destination country, for that you need the VAT registration. That is the situation today. So if we look at a seller based in Spain at this moment, and so he has signed up with Amazon in France, Germany, Italy, and Poland, and he has exceeded the distance selling threshold in one country, namely in Portugal. So he has VAT registration in his home country, of course, in Spain, in France, Germany, and Italy for the FBA program, and then in Portugal because he exceeded the distance selling threshold. Now let's just walk through what happens when we start selling. And on the left-hand side, you can see his current filings. So he has a regular Spanish VAT return, an Italian VAT return, German VAT return, French, Polish, and the Portuguese VAT return because we exceeded the distance selling threshold. And he also has sales in Austria, but in Austria, he has not exceeded yet the distance selling threshold. Now, once we start selling, before we do that, we have to bring some goods from Spain to the warehouses. So we're selling to Germany and to France, and that we have to report in both our German and Spanish VAT returns, and for France in the French and Spanish VAT returns because we move the goods around. Then we start selling, for example, out of Germany. So when we sell to Germany on the local market and look at the colors of the arrows because they correspond where the VAT on the sale is reported, that will be reported in Germany. So a local sale in Germany today is in the German VAT return. If we sell in France or in Italy in this case, then we sell it in the local return in Italy. In France, we sell it in France. In Poland, it goes to the Polish VAT return. And in France and Spain, we sell it in the Spanish VAT return. Moving then onwards, if we go cross-border to Austria, in Austria, we had decided we do not exceed the distance selling threshold, so then it's the ship from country. So we sell it with German VAT. From Germany to Italy, because we're registered in Italy, and we've opted to tax it in Italy, so it goes to the Italian VAT return. When it goes from Italy back to Germany, it goes to the German VAT return. From Spain to Italy, we report in Italy. Poland and France, we reported in the local VAT return. When it goes from Poland to France, it goes in the France VAT return, and so on. If we sell from France, for example, from Spain to Austria, it goes with local VAT in Spain. And when we sell to Portugal, there we exceeded the distance selling threshold, so it goes with Portuguese VAT, and that will also apply when we sell it from France. So that is the B2C sales that we conduct, about as many arrows we could think of. And then, of course, sometimes we have to replenish the stock in Poland or France. So we have the FC transfers occurring. Also, those have to be reported in our VAT returns as deemed intercommunity supplies. And occasionally, we don't have consumers on Amazon, but it can be business clients. Well, those also we report as regular business to business transactions, intra-community supplies. And so we may also be faced with the European sales listing and Interstat filings. That is the situation I hope you recognize from today, because if that's the case, then you're doing it good. But now let's have a look at the situation from 1 July. So the same Spanish company, same customers, what will change? Well, there are two main changes you see here. And we still registered in Spain. We're still registered in the 4 Amazon countries because that will be a requirement and remain a requirement. But in addition, we have enrolled in Spain, in our own country, for the one-stop shop. At the same time, we can let go of our Portuguese VAT return because we no longer need this return because we are making distance sales there, and we can move to the one-stop shop scheme there. So let's start over again. We're bringing goods first to the warehouses. Well, that will still go in the VAT returns as intra-community supplies and acquisitions, deemed ones, but still. But when we make a local sale in Germany, and this is for EU sellers, it's not for non-EU sellers. The target audience for this webinar is the EU. So if you are an EU seller and you make a local sale in Germany, even though this is a Spanish seller, it still goes in your local VAT return. So there's no change there. Also, when I sell from Italy warehouse to an Italian consumer, it goes still in the Italian VAT return. So if your question at the beginning of this webinar was, do I still need all the VAT registration I have today? The answer is yes, insofar you are selling goods from that location, because then you need to be VAT registered. So also from Poland, from France, all domestic sales will still be reported in the local VAT return. So that's how it works. But then, of course, there is also some change. So within Spain, there's no difference there, but then it starts. When we sell from Germany to Italy, so German sale from the German warehouse to a customer in Italy, then all of a sudden there is a big change, because before we would report this in the Italian VAT return, but because it's a cross-border sale, now it shows up in the Spanish one-stop shop return. So we file a one-stop shop return in Spain. And will the Germans not see at all what happens? Of course, we file a return in Germany and we will report that, but we no longer tax it there. And you can see this happens for sales from Spain to Italy, from France to Poland, also from France to Portugal in this case. Before we were VAT registered there, now it goes into the OSS. From Poland to France. So everything here that is cross-border, you see, goes into the Spanish one-stop shop return. So that is the big change compared to today. Outside of that, the FC transfers from one country to the other, that's still reported in the regular VAT returns, has nothing to do with OSS. It's only B2C where that applies. And also B2B supplies are outside the scope of the changes. So also there, we keep reporting them there as regular B2B supplies, and we will also be faced still with sales listing and Interstat. So looking at the various changes that are coming up, this is a little bit the landscape. So for an EU seller on a marketplace, what changes? The VAT registration in all fulfillment countries, there is no change there. VAT registration in countries where you have an optional request in place currently, well, that is no longer required, unless, of course, you file the option because you're registered there, because you fulfill from that country. But you don't no longer have to opt. Also, VAT registrations in countries where you have distance selling thresholds exceeded, you won't have that anymore. So you can deregister there if you're just making distance sales there. Well, currently we have distance selling thresholds of 35K up to 100K, varying per country. These will all be replaced by one threshold of 100K. Currently, foreign VAT has to be reported in a foreign VAT return. So if you report VAT in Portugal, you have to be registered there. Going forward, foreign VAT on B2C sales can be reported in the US one-stop shop scheme. It is optional, of course, so if you want to be VAT registered in any country, then no one's going to stop you. But it's, of course, a lot more burdensome. But some things remain the same. So local sales by EU sellers will still be taxable in the local VAT return. B2B sales reported into community supplies, that stays the same. And also the FC transfers are reported in the same way as they are today. Now, what are things to reckon with when you are an EU seller? Think about all the revenues that you are going to report in OSS in the OSS going forward. The member states are likely to audit the data that they see. Also, when you are very successful in the second half of this year and you report over 100K of sales in a country where you previously have never been VAT registered, well, then the tax authorities may be triggered to think, well, if he's doing so well now, what did he do before 1 July? And why didn't we see any VAT coming towards us before? So they may be interested to see your historic sales data. So this is something to consider, that you have that present. Also, think about your sales, for example, and the margins. Currently, you are likely to deal with a limited number of VAT rates that you're selling at. It's only the countries where you're selling from and the countries where you've exceeded the distance sales. But if you exceed this 10K, and I assume when you're selling on Amazon that you quite rapidly exceed this 10K threshold, then you have to take into account that before on most of your sales, you would charge 19% German VAT because you are selling from there. Well, going forward, the VAT that applies to your sales can vary from 17% in Luxembourg to 27% in Hungary. So have 10% of your margin that may or may not go into your pocket. That makes a big difference. Also, if you don't use the Amazon invoicing facility, then you have to be able to deal with the invoicing of VAT rates of 27 member states. And that does not mean that it's 27 VAT rates, because if you're selling multiple VAT rate goods, like food supplements, for example, you're easily dealing with between 40 and 50 different VAT rates that have to go into your VAT return. So a lot of things to consider, I would say.
Okay, welcome everybody from my side. Once Paul has already, I hope you enjoyed the merit-based and very detailed structure of the new OSS schemes. Then from my side, a little bit of introduction into how we can get prepared our business for the OSS. Yeah, so how we can actually make sure that when the 1st of July comes, then we are not left alone or left behind with whatever we are doing for our business, but instead we have at least some ideas or at least some processes going forward to make sure that this all obligations are met. Yeah. So first of all, please do make sure, that's really important, that you fully understand your supply chain and how the OSS changes will impact you yourself. Yeah. Because we know that in today's world, there, of course, we are talking about e-commerce, drop shipping, or any kind of related electronic sales, but this is all very various and it has their own particularities. So from one to another business model, there are no two business models alike. So be encouraged from all sides and by all means to analyze your business. Determine in which more countries you would probably require the registrations going forward, and then how the implications work in this scenario, yeah, coming from those countries, because we can imagine that at the moment you might be having only one country, two, maybe three, maybe some more, but maybe in the future going forward, you would like to also introduce your products to some more countries. So with respect to what Paul has just said, so with the diagrams and structures, make sure that you, let's say, understand this going forward as well. Determine, of course, which of the OSS versions, so the union, non-union, special arrangement applies to your business yourself. If you, for example, for instance, wouldn't like to change the way that the end customer by special arrangement is still paying for the goods and you still have a very good relationships with your local post provider or the courier, and you wouldn't like to change it, then of course, consider this as well. It's by no means obligatory to get, if your business case allows so, to make any changes. Yeah, just make sure that you understand this. Next to this, which rates, make sure that you understand, that you analyze beforehand which rates of VAT apply to your sales in each member state. This relates very, very much to what Paul has just said about the accounting system. We can see that a lot of sellers or providers, clients do not have the proper method of calculating this with respect to all of the countries. Make sure that your system or the payment checkout gets this method after the 1st of July, especially if not even before. Make sure that you are meeting all deadlines, because we can see the transition period, of course, as we saw in Brexit before, as we saw in a lot of ongoing changes we have seen in the past and right now. We can see that sometimes meeting the tight deadlines imposed by the authorities can be somehow difficult, because you are concentrated on sales. We can imagine that. And sometimes you just didn't have time to read through this. Make sure that you are prepared and that you meet the deadline, because then after this, potentially you might run into problems which we neither of us likes. Yeah. Ensure that your e-commerce accounting systems are fit for purposes. That's what we already mentioned. And make sure you are investing in appropriate mechanisms for uploading and retrieving the sales data, which brings us to the next point. How we can help. So how you can, and with respect to which exactly areas you can seek our help with GVC. As Paul mentioned as well, current FBA registrations remain in place and required. So this is something what we have been doing for a couple of years right now, serving a lot of clients, sometimes opening new markets like Germany for the very beginning, then other countries for the Amazon FBA. We can see that there is a growing attention from Amazon's side to be in all like other countries as well. So wherever you store your goods, wherever you have the warehousing of the goods, please do remember not to withdraw any kind of registrations with the desire to have the OSS, because that doesn't work that way. We can also provide you with our advisory on new situations. So whenever you are not sure, whenever you have some doubts with respect to what needs to be done or what your particular case entails, please do feel free to contact us. Please do use our 15 minutes, maybe even more free consultations in which we can run through your case, make sure that your the solution that we are pitching works on your end. Next to this, we can support you, of course, like maybe I should have mentioned this first, with the OSS VAT return calculation filing. So registration for the OSS is, of course, not a mystery to us. We have been cracking this for a while in order to make sure that we provide you with the valid solution. And at the moment, you can already register with us for the OSS, and you can make sure that all of your sales and all of your business going through all of the countries is prepared for this. Last but not least, and of course, that's only those are only examples of the services which we can do for you, is the automated extraction of sales data from your webshop. So if you have ever been bothered, and I guess you have been, with the manual uploading of the sales data, with working manually on site, or with outsourcing this well, cumbersome, in a sense, task to any kind of outsourcing company or your own in-house accountants, you yourself, then don't bother with this anymore, because we in GVC can also provide you with a very nice automated extraction tool and software, which brings us to the next one. So basically, if you are still, and I think that my colleague will also wrap it up somehow, if you are still not sure what to choose, how to cooperate with us, and how to make sure that in all those, let's say, headaches in a sense that the European Union is giving you with respect to the sales, please make sure to contact the right people to be able to help you with this.
Thank you, Paul and Michal, for this deep dive into the new OSS rules. I'd like to direct you to some of the questions that our participants had. Here's a question coming from Tamara Gimazes. Tamara is asking if it's necessary to have a VAT number in countries where the amount exceeds 10,000 euros. Paul, could you answer this question?
Yes. Thank you, Tamara, for the question. Yeah, I can imagine that it's somewhat confusing to hear about the distance selling threshold when we have currently a threshold per country. Exceeding the distance selling threshold of 10,000 euros applies to all countries combined. So it's not a per country threshold. So once you exceed the distance selling threshold of 10,000 for one or two other countries, then you are bound to charging VAT in the country of destination on all your cross-border sales. So that is a bit different. So you will be dealing with foreign VAT much sooner than before. But with the one-stop shop, the difference is that you don't have to register in the country of the consumer anymore, but you can settle the VAT in the one-stop shop return in the VAT in the country where you are established, or when you are not based in the EU, where you choose to register for this system. So it's not a registration per country. So yeah, the answer to the question is no. If you exceed 10,000 in another EU country, you don't need a VAT registration there. The only reason that you need a VAT registration is when you make sales from that country. So for example, when you use a warehouse facility in that country, then that is your place of supply, and you need a VAT registration there, but not because you exceed any distance selling threshold. You can register if you want, but it's just not mandatory anymore because you can opt to use the one-stop shop. I hope that answers your question, Tamara.
Thank you very much, Paul. Here's another question that is directed towards you, Paul. Sean McGarry from Ireland mentioned that he has his business based in Ireland, but sells in Germany and Spain, where he's VAT registered. Should he now deregister from Germany and Spain and submit his filings using his Irish VAT number?
Well, here in the question and the countries involved, it seems like Sean is selling in the Amazon FBA program in these countries. And as I mentioned in the presentation, if you are selling from Amazon warehouses in France or in Spain, then you will always need your VAT registration there. So you still have to report your local sales in these countries. It's only for sales that go to other countries. For example, you sell from the French warehouse, you sell to a consumer in Belgium, for example, then that cross-border sale going forward, you can report in your Irish one-stop shop return. So also if you exceed sales from France to Belgium 35K, and then today you would have a registration obligation. That is no longer the case, but you can report the Belgian VAT in your Irish one-stop shop return. But the VAT registrations in the Amazon FBA countries, you also need them going forward. I hope that answers Sean's question.
Thank you, Paul. Here's another question coming from Chris Hodgins. Chris mentions that the official EU website quotes that certain domestic supplies of goods supplied via the electronic interface should be reported via iOS return. Could you explain why this would not be a domestic sale included in the domestic VAT return?
Yes, and if I recall this quote, it does not refer to iOS, but it refers to the OSS Union scheme. And it applies only to sales that Amazon, for example, would fulfill for a non-EU seller. So imagine a UK-based seller selling goods on Amazon in Germany. Now, because the seller is based outside the EU, this sale in Germany, so from Amazon Germany, the UK seller is selling to a consumer in Germany. Normally, if it was an EU seller, then it would be a domestic German VAT sale, and that would be included in the German VAT return. But because of the deeming provision, so for sales by an EU marketplace for goods that are in the EU, but the seller, the underlying seller, is based outside of the EU, then the marketplace becomes the deemed seller. And that applies to the intra-community distance sales of goods. So if the goods go from Germany to Austria, they are deemed OSS sales by the marketplace. And that is the big exception. For non-EU sellers selling domestically via marketplace, there the marketplace can also include these domestic sales in their one-stop shop filing, because they wanted to avoid that Amazon, for example, would include sales from other parties in their regular VAT return, which is basically the VAT return for their own company. OSS as a marketplace, there they include all the distance sales, and that is the exception. So it's not under iOS, because iOS will never have domestic sales, because for iOS, per definition, the goods have to come from outside the EU. But under OSS, indeed, the big exception to the rule that domestic sales go in the domestic return is for sales where the EU marketplace is facilitating the sale for a non-EU seller. That's the exception. I hope that clarifies. It's a difficult subject, but I hope it came across.
Definitely. Thank you very much, Paul. There are two more questions. We have a lot of questions come from participants, for which we are really happy to see how enthusiastic you are to know more about OSS, but we have more time, just two more questions. Here's a question, Paul, that comes from Imre Horpatzi. Imre is asking what happens with the B2B sales, 0% EU sales. Will they also be included into the OSS system?
Yeah, that's a good question, and that is not the case. The whole reform that we have here, it's only B2C sales. So for B2B sales, nothing changes, and that is also one of the reasons why you need to keep the current VAT registration. And this applies to both EU and non-EU sellers. And so whatever you sell from a warehouse location in the EU to a business, there are no changes to that. So the changes here we talk about are all relating to B2C supplies. So B2B, there will be business as usual.
Thank you very much, Paul. Here's one last question coming from Sarah Sakumar, based in UK, I believe. Sarah Sakumar is asking because his or her business is registered in UK and using warehouse facilities from a third party. If they are registered, VAT registered in Germany, can they go and register for OSS in Germany?
Yes. Yeah, so they have their choice. So if they have multiple VAT registration, then they can choose in which country they want to register. And then indeed, where that can be because you speak the language in the country that you register there, but also when you have the majority of your warehousing in a country, then it makes sense to register for OSS in that country. So OSS will always be connected to a regular VAT registration, because you cannot register only for OSS, because from a country you can also make domestic supplies which are not subject to the OSS. So the answer is yes, you can register for OSS in Germany.
Paul, before we let you off the topic completely, there's a last follow-up question coming from Hugh Kainen, who already asked a question before.
Yeah.
If Hugh understands you correctly, if you are using the Amazon fulfillment FBA, then you cannot use the OSS?
Yes, you can use the OSS on your cross-border sales. It's only for non-EU sellers. They will not use OSS because they're the marketplace is stepping in. But for an EU seller, when you sell goods on Amazon, yes, you can use OSS on all your cross-border sales out of Amazon, for example. That's what I try to show with all the colored arrows. So the Spanish seller selling goods from Germany to Italy, for example, and that can all be reported in the Spanish one-stop shop. So most definitely you can apply one-stop shop to your marketplace sales. It's only the domestic sales that go still in the local VAT returns, but all cross-border sales out of marketplace locations, they can be reported in OSS. So you can most definitely use OSS when you're selling on marketplaces.
Thank you very much, Paul. So as you can see, One-Stop Shop was introduced to introduce a much more simplified solution. But if your business is based on the diversity of the goods and channels and geolocations where your customers are based, you need to pay a lot more attention to how this program is designed. So with those thoughts in mind, on behalf of GVC, I'd like to also thank all the participants who joined us today. We will let you know in the upcoming days how you can access this recording and the material that came along with us. If you would like to access more information about the whole sector scheme, please visit our website at globalvatcompliance.com under the tab Services. We are going to leave that chat room open for another 2 more minutes. But I see actually there are no more questions. So for now, we wish you all the best. We very much hope that you will join us at other GVC activities in the future. And thank you very much for joining us today.
Thank you all. Goodbye.
Thank you.